So I want to talk first today out of the gate about the local real estate statistics. We talk about them every single month. We talk about both Tampa and Sarasota. We do have an office in Sarasota now on Tamiami Trail. So this week I'm going to focus on Tampa, and next week we're going to cover a little bit of Sarasota. But the real estate statistics for October came out. We had 2,578 monthly sales in our board of realtors, an average sale price of $240,906, average home selling in 60 days, and 3.1 months of inventory. We start to see seasonality sometimes, and this year it's going to be a little bit different. I'm going to talk about that a little later in the show, about how seasonality isn't going to come into play as much this year because of the rise of interest rates, the election, and some other things that are going on locally and in the global economy. But we always like to compare year-over-year statistics because, if you look at September to October, we saw a decrease in the number of home sales from September to October. Again, somewhat normal to see that. You saw 2,926 sales in September, 2,578 in October. Average sale price stayed flat, $239,409 last month, $249,006, just up slightly. Inventory increased a little bit, and again, that's because of the fewer number of home sales. Inventory went from last month to this month, 2.9 to 3.1. But what's telling is really looking at it from the standpoint of last year. So last October, we had 2,621 sales in October. So we were slightly better last year in terms of the number of sales. But where we're not better was the average sale price. The average sale price last October was $216,364 compared to $240,000 this year. That is a 10% bump in the average sale price year over year in the Greater Tampa Associated Realtor statistics. So again, we might start to see we might have months where it's fewer home sales, but with an average sale price 10% higher. That's a pretty substantial jump. And when you flash back to October of 14, the average sale price was $203. So in 2 years, we've gone from an average sale price of $203 to $240 in that October span. Other numbers, last year we were 3.3 months of inventory. This year a little lower at 3.1. So what does that mean for you? It means prices are rising. It means that we're seeing fewer homes hit the market, and we're also seeing fewer homes sell year over year, but not by a lot. Pretty flat, to be completely honest. As you climb the price charts, we talk about this a lot, but as you climb the price charts, you see more and more inventory. Inventory hovers, less than 3 months for anything about $300,000 and below, and then starts to climb above that. What does that more inventory mean to you? It means it's going to take your home longer to sell, the higher the price. There's fewer buyers. There's less investors the higher you go. There's less people that can buy it as a rental property, and there's just less people that can afford it in general. And you have a lot greater chance of your home actually not selling, as you climb the price chart, because again, there are fewer and fewer buyers. So looking at a few, price points, under 500,000, we're less than 5 months of inventory. You hover around 3 and 4 months. When you start climbing up above 500, you get into 6, 7, 8, 9 months of inventory, 13 plus months of inventory for over $1 million, and lots of homes not selling in that price range. So you have to be very strategic, aggressive on your price, and aggressive with your marketing to sell, and to be one of the the homes that sell in the above $1 million. So as an example, we had 16 homes sell above $1 million in October, and there are hundreds upon hundreds of them on the market. So your chances of selling are a challenge.